Hello. Today, I'd like to talk about how embarking on an integrated accounting modernization path can help your organization achieve a faster close. My name is Kyung Soo Choi. I'm a solutions architect with the Oracle Financial Services Global Business Unit. I've been in the financial services space for over a decade and specifically at Oracle for over 5 years. So let's talk a little bit about some of the typical challenges we've seen with clients that cause the close process to be slow. One of the things is when you have a large number of segments in the chart of accounts. This is typically required for analytical purposes, but not necessarily for GL processing. Now, adding additional segments oftentimes is needed, but it slows down processing exponentially. So how do you resolve this conflict of two goals that are essentially diametrically opposed? One way we've seen clients achieve this is by using the closed data, but then they create one-off ad hoc reports at great time and expense. Another challenge we typically see is when the data sourcing, standardization, and normalization process is extremely complex and time consuming. It can take multiple days. A lot of times the actual formulas and standardization, et cetera, are almost like a black box. So take quite a bit of time to decipher. When it comes time to resolve GL discrepancies, especially to the transaction level, this typically requires significant manual effort. We see clients where there's a ton of custom Excel sheets to figure out the lineage of these discrepancies. And lastly, each source system requires specific expertise. So as in the previous bullet point, when you're talking about all of these various custom Excel sheets, you almost need one for every single source system, given that all the standardization, et cetera, is per source system and requires its own specialized knowledge. So how does Oracle's solution lead to resolving all of these types of challenges? So our solution is unusual in that we actually handle the granularity for each component separately. So when I say that, you can think of it as we have the thinnest GL for maximum performance, but at the same time, we can keep that lineage to allow for maximum dimensions and granularity for analytics purposes downstream. We provide an enterprise data sourcing and normalization platform. This provides visibility and governance as well as performance for the data sourcing process. In terms of figuring out how to resolve GL discrepancies, we have centralized, clear, and immediate visibility by a drill down from the top of the house down to account level balances. And lastly, this enterprise data sourcing platform is a unified platform. So it provides collective data visibility and governance across all source systems. So you don't have individualized knowledge that is required. So how does Oracle's solution work? Well, we provide pre-built integration between two of Oracle's industry-leading products. On the left side, we have our financial services data foundation, which provides a granular financial services focused data warehouse as well as data manipulation frameworks. And on the right side, you have Oracle's industry-leading ERP cloud. What we do is we provide out-of-the-box integration between these two platforms and visibility across the data stored in each of the platforms in order to provide visibility from the top of the house all the way down to individual transactions. Now, while all of those are geared towards a faster close, we provide additional benefits when implementing Oracle solution. One is that you as a side benefit, you receive consistent statutory, management, and regulatory reporting. So no more chasing down discrepancies among all of these different types of reporting, since everything is aggregated from the same data. Another is that you receive a unified analytical data platform across risk and finance. This is especially important when you consider that we get this golden source of truth that you can use for almost anything downstream. Because of our out-of-box integrated architecture, you can both reduce costs as well as achieve faster time to market with your finance transformation. And lastly, one of the core concepts of Oracle solution is to be what I call a white box architecture, where everything is open and transparent, where you can plug in all of your own proprietary as well as existing applications to coexist in harmony with our solution. And this allows you to address emerging needs. If you further down the line, if you decide to have additional source systems, or you want to make changes to your chart of accounts, etc. So let me walk you through the overall reference architecture and how clients have implemented this. So starting from the beginning, you have all of your various source systems. And what you will do is load that data into our staging area. So that's where all the customer and account data, ledger data, transactions, et cetera, get loaded into our pre-built staging area. We can then apply standardization, normalization, and even provide data quality checks to ensure that all the appropriate information is required before moving further into the process. At that point, the data from the staging area is aggregated and then fed using out-of-box integration to the Accounting Hub Cloud service. From there, accounting rules are applied in order to generate the GL credits and debits. During consolidation and close, this information is then passed in and creates the consolidated ledger, and you can then start to generate reporting. Now, after that process or during that process, the GL balances and adjustments made in the general ledger as well as Accounting Hub then actually get fed back into the staging area. Now, this is extremely important because at that point, there is a reconciliation between the granular data stored in the staging area as well as the general ledger. So those two are now in sync. So one of the big benefits is that this information then can be considered as a golden source of truth that can then be used for downstream use cases. Now, these downstream use cases can run from anything within risk, so things like credit risk, liquidity risk, loan loss forecasting, to performance, so profitability, funds transfer pricing, et cetera. You can use this for regulatory reporting. And in fact, we even provide the ability to use compliance as well as customer insight use cases from this information. Now, as I mentioned earlier, one of the core tenets of Oracle solution is that this is all a white box architecture. So if you already have existing funds transfer pricing application, for example, you can utilize this golden source of data without changing out your applications. Of course, we also do provide specific use case engines that allow you to take this information and essentially automatically apply it and generate processing and results as well. Now, from a reporting and analysis perspective, we typically use our Oracle Analytics Cloud that allows you to look at both sources of information and seamlessly drill down from one to the other. So what this allows you to do is either drill from top of the house balances down to GL balances, down to the individual transactions that have constructed that information, or from bottoms up. So if you discover something, you can actually drill all the way up and see what are the what are the affected general ledger balances, etc. At the bottom, you can see all of this is governed by our analytical infrastructure and governance. So everything is tracked. You can get full lineage of everything that has been done, all the way from the source information where the data quality checks have been applied, all the way through to the results as well as to the reporting. I hope this information has been useful to you. If you have any questions or comments on this presentation, I welcome anything to my email address, which is on the screen. I hope this has been very informational, and I look forward to hearing from you. Thank you.